Hi, this is Andy Chambers. Thank you for joining me for today's update. We want to begin by taking a look at the Dow. We don't get big developments in the stock market all that often. We think we had one last week when the Dow broke support at 10,225. Right now, it looks like we could have an intermediate term top in place. We bought puts last week and we expect to add more on rallies. The next hurdles for the bears are seen at 96.78, 94.30, 92.50, and 91.15. A close over this month's high of 10,730 would reaffirm the bull trend. If you want to trade the index, we would suggest buying long-term DIA or Diamonds Trust puts. Now let's look at a couple of individual stocks that look like they could have good downside potential. Amazon broke support before the Dow. We expect a further decline. We think the decline could fill the gap near 97.50. Initial resistance is seen in the 127-130 area. A close over 142.60 would put the bearish outlook on hold. Last week's downside gap could mark a top for IBM. The initial hurdle for the bears is seen at 115. The next support beyond that is near 100. A close over this month's high would reaffirm the bull trend. Now we want to talk about why we've fallen for the Forex after so many years of trading stocks and futures. I still like stocks for intermediate term and long-term trading. For day-to-day trading, I love the Forex. The reasons are simple. The Forex has tremendous liquidity, so the fills are very good. The contract size is flexible. There are standard contracts, mini contracts, and micro contracts. I was involved in futures trading for years. It's hard to manage your money in futures with a small account. The flexible contract size, low commissions, and limited slippage make it easy to do in the Forex. The commission on a standard lot in the Forex is about $30. The commission for a mini is only about $3. And the commission for a micro is an unbelievably low 30 cents. The Forex also swings nicely and trends well. I think it's by far the best trading vehicle for short-term trading. On a monthly basis, the most significant development we saw in the Forex coming into the first of the year was the big bearish reversal in the EUR-USD. That's the euro against the dollar. We like wide range reversals best when they occur in conjunction with other technical setups. In this case, we had a wide range bearish reversal plus a possible lower high top. Lower highs tend to lead to lower lows. If the setup holds, the EUR-USD could ultimately decline below last year's low of 123.28. A rally through the November high of 151.44 would void the setup. After the sharp decline, the sideways correction on the daily EUR-USD chart set up a trend confirmation sell signal. A trend confirmation sell signal occurs when the stochastic rises above the previous stochastic high, but the price high is lower than the previous price high. In this case, the stochastic rose to a higher level than any of the three previous stochastic swing highs, and the price high was lower than any of the three corresponding price highs. This gave us the EUR-USD setup we were looking for. The 360-minute EUR-USD chart shows a lower high top setup that offered an excellent opportunity to probe the short side on Thursday the 14th. Watching the shorter term time frame allowed us to get a jump on the daily signal that was confirmed on Friday. The pair quickly declined toward 140 over the next few days. So it was a nice setup. Now we're going to take a look at another longer term chart. Last year's rally in the pound wasn't nearly as strong as the rally in the euro. Like the euro, the monthly chart appears to be setting up a lower high top. Unless the pair breaks through last year's high of 170.42, we see the potential for a decline below last year's low of 135. We're looking for a higher low bottom in USD CAD. In fact, it could be setting up right now. The bullish reversal in October could still be the low we're waiting for. We'll have to wait and see what develops from here. If we do get a higher low bottom on the monthly chart, we see the potential for a rally toward last year's high. Right now, a monthly close over 110 would be a positive sign for the bulls. we probed the long side last week. The first EUR-USD chart we looked at showed a bearish reversal on the monthly chart, a wide range bearish reversal at that. The reversal bar is one of our favorite setups. As we said before, we like them best when they occur in conjunction with other technical setups. Here are some more examples of reversal bar setups. This weekly reversal with a higher low bottom worked out very well. This bearish weekly reversal occurred in conjunction with overbought stochastics. Worked out well so far. It's the EUR-USD that we've been spending a little time on today. Here's a reversal bar lower high top setup that did all right. It wasn't spectacular, but it went the right way for a while. The setup we just looked at was followed by a reversal bar higher low bottom setup that did very well. The next example is a reversal bar lower high top setup that didn't work, but the loss would have been very small. Well, I don't want to finish with a loser. The next two setups aren't reversal bar setups, but they're lower high top setups in the AUD-USD and the NZD-USD. They wound up working out really well. They declined over each pair declined over 200 points over the next couple of days. That's the end of today's update. Thank you for your time and attention. Good luck and good trading. We'll talk to you soon.